Now, when it comes to Israel, there's a lot of venture capital funds and a lot of money going in locally into the market. But there's one person that actually sits above those funds and really has his finger on the absolute pulse of everything that's going on in Israel and has for the last 25 years. Our first speaker, I know I said earlier that we're going to do 10-minute talks, but actually our first speaker is so interesting and has so much data and so much to share with us that we've given him double the amount of time of everyone else. So it's a great pleasure to welcome a dear old friend of UK Israel Business, Alan Feld, who's managing partner of Vintage Investment Partners, who's going to really get us started by giving us an overview of what's been going on in Israel, and more interestingly, what's going to happen as well. So Alan, the stage is yours. Thank you.
Thank you. Wow, those are expectations that are really hard to meet. So I will do my best in the next 20 minutes to talk about a few things. What they've asked me to do is talk a little bit about various sectors in Israel and trends that we're seeing, and then maybe talk a little bit about some companies which we think are interesting companies. The companies that are here and presenting, we're not going to talk about because they'll present themselves, but they're super interesting companies. Many of them we've known, some of the entrepreneurs we've known for 20 years, and I think you're going to enjoy the day. I'll talk briefly about Vintage, something I call the industrial disruption, and then I'll drill down to three areas: artificial intelligence, smart mobility transportation, millennial economy, and some lessons that we've learned from the 25 years I've been doing this. So a few words about Vintage. I started the firm in 2002, 2003. We managed $1.8 billion. We do basically three things. We have funds of funds, which in other words, we invest in other funds. We buy secondaries in funds and in companies, and we do direct investing. We also do that in Europe and the US. Reason, 85% of the money that's being invested directly into companies in Israel is not by Israeli venture funds. It's by US, European funds and corporates. And so for us, in many ways, to get to some of the best deals in Israel, we have to invest here to get there. A classic example here in the UK is Excel and Index are very, very active in Israel. So we've done 11 funds, 34 team members. A lot of the data I'm going to present today is based on the fact that we track 6,500 companies. We have 34 people. We meet about 20 to 30 companies a week. One of the things that we've done, I'll skip through the team, and this is some of our portfolio funds in the US, Europe, and Israel. We've been fortunate to be in several of the better funds, and it's been a pleasure to work with them. One of the things we've done because of the 6,500 database, if many of you have heard of, I assume, or some of you may have read Startup Nation, we were the data for the book. And so Saul Singer, who wrote the book, sits on our advisory board, and he's sort of a magnet when people come over looking for technology. So we created a free service for large corporates when they're looking for something specific. They tell us what they're looking for. We look across the database. We're sort of the Switzerland of the industry, and we identify the companies which we think are the most interesting across the portfolios of everybody. And we've done that now for 376 global 10,000 companies. We set up roughly about 700 meetings a year. We've been now doing this for 2 years. And we've done about 220 visits over the last 2 years to Israel for people to meet these companies, and we do it for free. The reason we do it for free, we're the only real fund of funds in Israel. We want the companies to be successful there. So the more successful the companies, of course, it's good for everybody, including us. And here's some of the large corporates we've done this work for, and it's gone very well so far. Okay, industrial disruption. I love this cartoon. Disruption means the transformation of models and value networks driven by technology and business innovation. But the cartoon, my startup is so disruptive, we disruptively disrupt other disruptors. And that's what's happening. In the 25 years I've been investing in technology, I don't remember a period where I've seen so much fundamental change in every sector. Whether it's transportation, whether it's real estate, everything you can imagine is fundamentally being changed. It's very interesting when I talk to public investors. They're looking at typical ratios, and they're not looking at what's happening to that industry and understanding sufficiently what's happening to the industry when they make a long-term investment in a public real estate company or a public retail company. The changes are dramatic and they're fast. So I wanted to, and the reason really that's happening is First of all, obviously, the technology is getting substantially more significant. But it's not just only affecting the businesses. It's affecting government. It's affecting everything. And every company now has repositioned itself as a tech company. There's a famous line from Jamie Dimon of JP Morgan, we're a technology company. They have 22,000 engineers at JP Morgan developing technology internally. So if you're not repositioning yourself, or more importantly, actually doing technology within the context of your business, you have some really interesting challenges ahead of you. And so I wanted to talk, as I mentioned, about artificial intelligence a bit about mobility, and I think a huge fundamental change is how millennials are buying and taking services, and that's affecting business models in dramatic ways. So artificial intelligence, you've got some phenomenal companies who deal with this today. They will describe it way better than I will. But what I thought I would do is highlight what we call, as an investor, the artificial intelligence stack, and where we think there's some interesting opportunities. And I'll talk a little bit about some Israeli companies in that context. First of all, why is artificial intelligence important? If you go back a number of years ago, people have been talking about artificial intelligence for ages. The difference is super high, the processing power that we have today, the volume of data, the accessibility of data, the ability to clean data has dramatically allowed us to start analyzing this data and acting on that data on a real-time basis. And so everybody, certainly some of the greatest minds alive or previous or until recently were alive, have been talking about this wave as something that's going to fundamentally change things. Imagine even the prediction by 2049 of a book that would be a New York Times bestseller being written by artificial intelligence. But the most dramatic change is what it's going to do to employment. If you look at how many jobs are going to be automated and are being automated in so many ways, today a lot of artificial intelligence is a tool to help people to do their job, but in many cases it may replace people. And I don't believe the governments have sufficiently understood what the impact that's going to be in social and other issues. But here's some of the work that the OECD did showing which industries are going to be the most affected by artificial intelligence on the employment side. So this is what I meant by the AI stack. We start off at what's known as the hardware, moving up the stack to the people who are users. And I want to talk a little bit about a few companies that are examples of companies doing really interesting things in that stack. So a company called GraphCore, there's some Israelis involved in it. It's actually based now in Europe. What they're trying to do is they're doing chipsets which can analyze this ream of data that's getting to them at the edge. In other words, not bringing the information to some central location, but analyzing it where the data is being gathered. The value of that is it makes it far more real-time, it makes it far more efficient, and those changes are very dramatic. Of course, many of the large companies in the tech space are also doing this. This is hard to do, and you need a lot of money to do it, but GraphCore seems to be doing something very, very interesting. If you move up the stack to the providers, and we're in the building of the data of the data center providers, it's hard to believe there'll be anybody else. Amazon has done, to their enormous credit, a phenomenal job at owning this industry. Google and Microsoft are fairly far behind. And clearly the Chinese are getting in this area. And so we think this area is owned. To be a new data center in this space is going to be, at best, a challenge. Then you move up the stack, and then you see how these AI algorithms are being used for applications. And here's a great example, Israeli company called Gong.io. What do? They listen to sales calls by salespeople, right, or customer service people, and they analyze it. They listen to the tone, they listen to the text, and then they can identify the problematic salespeople or the problematic customer service people. They can also train them. It gives them feedback about how they're reacting to a customer. Again, using AI to make sales far effective, or telephone sales far effective, or telephone support more effective. Law geeks. I used to practice law before I moved to Israel 25 years ago from Canada. They say that people who were once smokers, when they stop being smokers, are the most anti. It's the same thing with lawyers. So what LawGeeks does is it automates contract review. So far, it's working on simple contracts, non-disclosure agreements, et cetera. But essentially, the vision is to be able to analyze the contracts, to give comments, to identify inconsistencies, et cetera, and eventually replace the lawyers. AI, there's lots of limitations. It's only as good as you program it. It's, we have abilities that machines don't yet have, and that's intuition, and there's psychology, et cetera. So right now, AI is, in many cases, a tool for decision-making rather than a total decision-making solution. Having said that, clearly, some of the companies in this audience, Spark Beyond and others, are trying to do exactly that. Smart mobility. We're still seeing people move to cities. The projection is that 66% of people will live in urban areas by 2050. Getting around London is like a nightmare. Imagine what happens when a lot of people from outside of the city start moving into the city, and what's going to happen to congestion. So transportation is fundamentally going to have to change. Many of you heard about autonomous vehicles. We had the CTO of General Motors, Chief Technology Officer at General Motors, speak at our annual meeting last year. And he said, we're probably about 10 to 20 years away from a truly autonomous vehicle. But there are some interesting things that are happening along the way that I'm going to talk about. The idea of shared mobility. We use our cars today 4% of the time. It's ridiculous. Why own a car? Millennials, in many cases, can't afford cars. So today what we're seeing is much more car sharing and mobility services that are services and not owned things. Electric cars coming, again, pollution, urban cities. There's some very interesting companies, especially in Israel, doing some interesting things about battery technology for cars. And finally, everything's connected. Again, the same John Lochner from General Motors refers to today cars as mobile devices on wheels. Everything is connected. That's going to facilitate autonomous driving, but that's going to facilitate other kinds of services. Now, what's enabled all this, of course, is imaging. You've seen Mobileye and others, but also it's this connectivity that I mentioned. It's the huge amount of data. It's vehicle-to-vehicle communication technologies, vehicle-to-infrastructure technologies, et cetera. All this is coming together at one point. Autonomo was referred to. They're trying to basically build a platform that takes all that data and manages it and finds insights from that. One interesting company an Israeli company, doing something very interesting in the autonomous space is Kodiak. What they've done is they've developed an autonomous truck. The big problem with autonomous driving, and including the regulatory problems, are within cities. Remember this famous story of the pedestrians who have been killed because of in autonomous driving tests. What they do is they have a truck that goes from the entrance of a city to the entrance of another city, and it's driven in to the city by a truck driver. So in other words, the whole process from city to city is autonomous. Interestingly enough, because in the US, that's a federal regulatory issue and not a state regulatory issue, because they're on federal highways, they have passed the regulatory problem and will be on the road within the next 2 years. And just imagine, autonomous trucking, what that does to the Teamsters, to efficiency. Autonomous trucks don't get drunk, and they don't, need to sleep. The effect is going to be very dramatic. But if everything's connected, there's also a risk, right? Somebody could take control of your truck and crash it. So Columbus Security, another Israeli company that is doing security solutions to protect the car. It's almost like a firewall for the car, and making sure that nobody can take over that car or control that car. Very interesting company, doing very well. I mentioned millennials. They're not buying cars. And there's a perception when you talk to General Motors and Volvo and others that the car sharing issue is here to stay. And even when these millennials have families, chances are, in many cases, they will not be buying cars. And so the car sharing issue is huge. The impact on the car companies is going to be dramatic. It will also be very, very dramatic on car insurance companies when you think about it, right? The way we buy car insurance today is not the way car insurance is going to be sold. It may be sold by the mile and other ways rather than selling us car insurance by the year. An Israeli company in this space of car sharing is Via. It is again, sort of a high-end form of Uber. Those of you who have been to Israel and been in a Sheirut, that's what it is. It's basically a Sheirut, and they made a Sheirut into a startup. Millennials, I love this. We have 5 kids, and several of our kids are already in that millennial category. I'm a 21-year-old female who skateboards, listens to jazz rap, wears boho chic, goes to poetry slams, and plans a career in environmental conservation. What can you, and every parent in this room must know this, what can you do for me? And that's the way millennials are thinking. The idea of one size fits all, I'm selling you something that you're going to buy that isn't customized to you, isn't providing you with an experience unique to you, forget it. And that's why you're seeing retailers all figuring out some way to attract millennials, give them experience. Why should they go to a shopping mall if they can buy the stuff on Amazon? And so we compiled a ton of research around this, and we read all these reports, and we found some very interesting things about millennials. One is, and I don't know the UK educational system, but certainly in the United States, people come to finish school with enormous debt burdens. Many of them, a lot fewer of them are getting married. In many cases, they don't necessarily have classic dual incomes. As I mentioned, very few of them own cars, and only 37% of them own homes or even plan to own homes. At least that's what they're saying. They're minimalists. In other words, many millennials are very mobile. They tend to move from city to city based on opportunities, so they don't buy a lot of stuff. As I mentioned also, this experience part is a very important part of what millennials look for. What's also interesting is if you look at their parents at that age, very few of them are carrying credit cards. It's cash, it's debit cards, et cetera, and of course, it's things like Apple Pay and others. So again, that has a very, very substantial effect on how the economy is going to go. So some of the things that when we're looking at companies, and I'll give you some examples in a minute, of companies that are taking advantage of this millennial concept is, first of all, millennials understand their commercial value. They want customized products. They want stuff that's fit for them. They don't want to be categorized into some very broad segment. Second, a lot of companies are now using AI, artificial intelligence, IoT AI and IoT basically to track millennial behavior and identify it and personalize for them. Personalization by far is the key issue, what we say the culture of the niche. You've got to basically be giving the millennials exactly what they're looking for, when they're looking for, if you want to buy. Again, experience. Not just selling something, but giving an experience around it. And the other thing that's interesting is millennials trust each other. They don't trust advertising. And there's a very big question about how advertising going forward. We have a company called Yotpo, which encourages people to write recommendations when they're most in a positive moods, and then repurpose those recommendations to others that have similar backgrounds or to their friends, etc. And what you see is a huge uplift in sales from that technology. Again, people trust their friends more than they trust typical advertising. Now, there are two aspects with millennials. One is the gig economy, the idea I don't have a full-time job, I do stuff, part-time as I want to do it. And the other thing is the sharing economy, which are relevant to millennials. Let's talk about the gig economy. This idea that people will go to 9 to 5 when they're millennials and work seems to be going away. For a number of reasons. One is there aren't as many jobs being created, classic jobs being created. But again, millennials have this attitude, I want to do stuff when I want to do it. And so you're seeing some very interesting companies around that. One is a company Israeli company went public a couple of weeks ago called Fiverr, what it does is it allows people to offer various services on an online marketplace, ranging from design services to anything you can imagine. And the idea again is I'll do the work when I want to do the work. I will have a direct relationship with you, customer. I'm not going to work for, say, if I'm a designer for a large design company, I'll do it myself. And I'll basically sell my wares over this marketplace. And it gives them the freedom to work when they want to work. The company did very well in its IPO and is growing very nicely. We're investors in a company called Wolt. And the important thing about Wolt, I know some of you may know it, it's in the food delivery area, but one of the interesting things about it is look how they're pitching people to work for Wolt. As a Wolt courier partner, you earn money by delivering food from restaurants to people's homes, deliver in the evenings for a few hours during lunches, or whenever you feel like it. Again, that's pitching to millennials with this idea of not formalized work, but working when you want. I'm going to skip this sharing economy. One of the big questions, is will that be relevant when the millennials grow up, when they have children, et cetera? Clearly not for everybody, but I think there are some fundamental changes that have happened that if you don't realize that, you're going to have a really tough time, at least selling to people under the age of 40. And who knows, maybe longer term, this will be something that will be the norm. A few things about investing in Israel. And I mentioned some companies which we think are really interesting. When we look back at all the exits over $500 million, it's the companies were managed by the entrepreneurs. 80% of them were managed by entrepreneurs at the time of exit. Of the 20% that were not managed by entrepreneurs, the Israeli entrepreneurs originally, 10% of them, in other words, half of the remaining, were managed by Israelis. So if you're looking at a company and you're thinking about investing directly into a company, don't invest if you don't think the entrepreneur can scale. That was the biggest lesson we've made, the mistakes that we've made over the years. You can get very excited about technology. If you think the entrepreneur can scale, stay away from it. So one of the things that we liked about the companies that I mentioned before, these are scaling entrepreneurs. And many of the companies going to be presenting today also have been started by founders who can scale. Second thing, it's very hard to start a successful business and stay in Israel and have your management team stay in Israel. It was mentioned, reference to the comment before about creating jobs in the UK. There's a reason. If you're not close to your customer, you can't sell. It's very hard from Israel to build these companies. So if you look at the vast majority of VC-backed companies, the entrepreneurs end up moving to the US or to Europe, increasingly to Europe, by the way. London is becoming attractive. And that's fundamental. So anytime you're looking at companies, those are two factors you've got to look at. Obviously the technology and obviously the competition, but when I look at errors that we and other VCs have made or investors have made over the years, it was not understanding these 2 points. Look, bottom line is there's some amazing opportunities. You've got to be extremely careful. You always got to be wondering, is the opportunity coming to you because it's you, or it's because they've tried to raise money in every other place in Israel and haven't succeeded, and they start coming to the UK. So you always got to be careful. But if you're careful and you partner with ideally local partners who hopefully know what they're doing, you can do exceptionally well. And there's some very, very good funds in Israel. Unfortunately, we benefit from investing in them. Thank you very much.
Thank you. Alan, thank you very, very much. That was really a bit of a whirlwind tour, and hopefully that's really set the stage for the rest of today in terms of giving you some inspiration, giving you some foresight into the future. So Alan, thank you very much for joining us.